Hi there, my name is Schumann. I'm a realtor in the Twin Cities and I help people that want to buy or sell in the metro area. Minneapolis is in the upper Midwest and there isn't a heck of a lot around the Twin Cities, but we are a hub for colleges, universities, as well as medicine and many other big businesses. Because of these draws and our good economy in general, people move here from all over the world. Today's video is about buying property in the United States if you are not a U.S. citizen. Yes, you can do that. If you have cash for the purchase, you're set. If you don't, this video is a bit of a baseline for people that need to finance some portion of their purchase. In order to get the nitty-gritty on how this works, I'm talking to Tonya Sample at New American Funding about what the qualifiers are, how they would evaluate whether or not to give a loan to someone, and other things you may want to consider or be aware of when you're thinking about a purchase here in the United States. If this is something that you're interested in, head down to the description box below this video. You can tap the title of the video on a mobile device and that box will pop open. There's a one-page download down there that gives you some options. If you download it and you think, wait, I don't fit in this description, do me a favor and call a lender anyway and just see what they can do for you. Today's discussion and that download really aren't the be-all and end-all. There are other options that exist, so it'd be great if you talk to somebody in person. You can also drop a comment down below or contact me via email, phone, text, however you like. My contact information is also down there if you have a question. This is where you begin. So what should a foreign buyer know if they want to purchase property in the United States? So like if they came to you and they needed a mortgage, where do we start with that?
Yep. So where we are going to start is obviously at application, but the first things before we even do the application are going to be, do they have a work visa? Have they applied for Social Security? If they don't have a Social Security, or if they do, it takes us down two different paths of what kind of loan we're going to look at. In some cases, we may have to require more down payment versus less.
So if they have a Social Security number, what then?
Yep. So if they do have a Social Security number, then we're going to be looking at credit. And typically when someone is moving in international, they don't have U.S. credit. And U.S. credit is different than international credit. Typically international, that we use the three main bureaus: Experian, TransUnion, and Equifax. And so those bureaus don't report internationally. There's some similarities in Canada, but it's still a different scale. So identifying, do we have credit or do we not? And do we need to establish credit for what we want to do? They can actually take a loan without having credit, as long as they don't have credit, not that they have bad credit, that they don't have U.S. credit. So, or we can help them in establishing.
You're distinguishing, if they have credit and it's bad credit, that's the same as any other lender. Any other person trying to get a mortgage. You're going to look at their credit. If it's bad, they either need to improve it or, oh well, right?
Yep. Then we're going to try and help them in ways that they can improve that. So it might take them a little bit of time to do that.
So if they have zero credit, they haven't opened a U.S. credit card or bought anything in the United States on U.S. credit using their Social Security number, they have to use that?
They do. So if we, depending on what it is that they're wanting to purchase, meaning not necessarily what property is it, but how much money they have out of pocket to be able to purchase. If they're going to have a lesser down payment, then we're going to need to establish credit. But they could essentially come in with no credit at all and still be able to obtain financing. They're just going to have to put usually at least 20% down, maybe 10%, and their income may dictate some of that as well.
But you can use income from overseas, or you have to have U.S. income?
We would be using U.S. income because this is going to be for their primary residence.
So if they don't have credit, you're saying they can establish credit or they can get a loan without credit. Would they have a penalty then as far as interest rates and stuff like that?
Yes. So if we have let's say it's a no credit, that is actually going to be based off of that person we're going to have a make believe where we're going to say it's a 620 credit score. So that 620 credit score, whenever we're looking at that conventional conforming financing, that they're going to take a hit on their interest rate. They're going to have a little bit of a higher interest rate because of that presumed credit score, which is actually at 0. But that is how the no credit will work. Now, if they were to have, let's say they did have US credit, and a sweet place to be is anything over 720. So if they did have that US credit, then they're going to get your standard rates. They're not going to be penalized for not having the work history here in the US. So if we can get those credit scores, they're going to get better pricing on the interest rate, but the fluctuation between the pricing is not significant enough to make me, if I just got off the plane and I wanted to purchase a home today, it wouldn't make me want to necessarily get a rental and wait that 3 to 6 month window to build that score if I could go ahead and do it now.
So we're talking about, like, what would you say, like, the difference in credit, not in credit, in interest rates would be between the two?
Yep. So the difference in the rates, I would say they're most likely going to be anywhere from a half to a full point in interest rates.
Okay. So that's not, especially not now, not a crippling thing. So,
Yep.
So you're saying, now, what if they had to establish credit here, like they had a social security number, but they have no credit and they decide they want to establish it? How long would it take them, do you think, to get a credit score that you could use to get a loan?
Yep, I would say typically when we have a no score and we're just starting out and looking to establish, obtaining the credit is going to be one thing. We don't necessarily need to use it. We just need to obtain it. It usually takes the creditor, so let's say it's a Visa credit card. It usually takes them at least 30 to 45 days to report that account initially. And so we may be out anywhere from 2 months to, it could potentially take a couple more months. So let's just say 2 to 4 months before we really even see a score reporting on their report for them.
So that would just be something they would need to take into account if they think that they could get a good credit score, save that point in interest or whatever, and then go on if they just, if they had the time to do that.
Yep. Okay. Another thing that we can also do on a case-by-case scenario would be if they did have credit accounts international that did not report to the bureaus and could show proof of that credit history, we can also use that non-traditional credit as well in some cases.
I wondered about that because I thought that at one point we were talking about, there was some discussion of this in our office and you were there, and there was, you were talking about giving credit, I think, without a social security number. Is that correct? Like,
yes.
Somebody that was like working with immigrant community. Okay. Yep.
And to that point, Mary, so that is what we call, it's an ITIN loan. Okay, and that's just it's an international tax ID, ITIN. And so it's an international tax ID. You don't have to have a social security number. Those loans are a little bit different, where they typically are going to require that they have at least 30% down.
Okay. So if we have somebody come and get a mortgage here and they don't have 30% or some giant down payment, and you're building credit for them, or they don't have bad credit, they don't have any credit, and they're paying that bit of a higher rate, what happens then? Because nobody wants to pay a bit of a higher rate.
Yep. So what we do, so we monitor our loans. So if we had someone where we initially had closed on a program where we did have to take a higher interest rate, then what we would do is we would monitor that. So at some point during their ownership of that home, they are going to have established these things, and their financials in the United States are going to change. And so that is something where we would just circle back and do a reevaluation on their scenario to see if it is an opportunity to do a refinance into a lower interest rate and save them money on that mortgage if they're going to continue to hold that. In some cases, if you have people that are coming in, I think of medical professionals. So if you have someone that's coming in on a shorter term stay, they may not even really care about that anyway, as far as the, later down the road refinancing, because they're most likely not going to hold that property.
That was the question I had for you too. Like, when does it make sense for someone to purchase and get a mortgage versus like, okay, forget it, I'm just going to rent because it's too much.
I think for them, it would depend on how long it is that they're planning on staying, and also what their lifestyle requirements are going to be. So are rentals available in the areas that they want, and is it the kind of property that they want? Do they want to invest in that real estate and hold it? Or are they hoping that there's going to be an increase in value and turn a little bit on that investment as well whenever they do go sell?
So it's really the same criteria that almost anybody's using to evaluate. Yep. Okay. And if they bought the house as a primary residence and then held it, but didn't stay, maybe they went home, does that change? Do they have to refinance? Or like if they wanted to use it as an investment property after that point?
No, they wouldn't have to change anything at that point. They could if they wanted to, but they most likely wouldn't. They would have a better rate leaving it as is than refinancing it into an investment. Yeah.
Okay.
Person is going to have a valid visa, and usually it's some kind of a work visa, so it cannot be expired. So there's that. And
can it be a student visa or no?
It will be a work visa.
Okay.
One of the things that we should also just mention for international buyers is when they go to sell.
Yes.
FIRPTA. We have acronyms for everything.
Such a pretty one too.
FIRPTA.
I'm leaving that in there.
I sound like a frog. But that's the, and you know what, acronym. So I went ahead and I wrote it out for myself even, but Foreign Investment in Real Property Tax Act. So that is something that when they go sell, when that person sells that property, there may be some tax things that will apply to them. Those questions are for a CPA. And how that will impact that person when they sell that property. So
and that's one of the lovely disclosures that we make them sign when they start working with us. Please don't ask me tax questions. I'm a realtor, not a tax person.
Yep. I'm not a lawyer. Right. I'm not a tax person.
Right. Anything else that you have on the top of your head about this?
Every scenario is going to be a little bit different as far as where the person is at and what they're trying to accomplish. And I think just having the conversation and going through the application so that on the lender side, I can learn what we have to work with and try and figure out how we can make it work. I'm sure it's hard enough making those travels and maybe coming alone or with a family or working to get the family here. And so, I just encourage people to reach out so that we can have those conversations and see what options we have.
And I think the earlier the better, because
for sure,
you just want to know how to get your ducks in a row and plan. Yep. And it's like, it's so hard when everybody decides to do something like, oh, hey, let's try this. Well, no. And now you're looking for an apartment, which sucks.
Right.
So,
yep. And I would say if you're not paying cash and you're going to need financing, don't even bother looking at the properties yet until the financing piece is in order. Because that is for sure a big sad day whenever we realize we found the perfect property, but we're not able to purchase it with financing.
Yeah,
so
that's a hard
you're
lesson.
welcome. Have a good afternoon.
Thanks so much for watching. Let me know if you have questions or if there is any way that I can help you out.